All right, hello, everyone. Welcome to your weekly market check-in here with myself, Greta Wall. I'm your host, and I'm joined by Derrick Oldensmith. Derrick is the head trader at T3 Trading Group and the leader of T3 Live's ProDesk virtual trading floor. Doing this on a Tuesday instead of our typical Monday because Derrick was traveling yesterday, but we want to make sure we give everyone his insight for the week. So before we get into any market discussions, just a quick look here. These are Derrick's current positions as of our stream here. Today, again, as I said, he is a registered professional trader, the head trader at T3 Trading Group. So we've covered that. All right, Derrick, our topic of the day today is U.S. versus Iran. Does the market even care? Talk about how's your Tuesday going, first of all, and then talk about how your interpretation of the market reaction to the U.S. strikes on Iran, the response, the ceasefire, all the things that have happened since then.
Sure. So just getting back into the swing of things, had an 11-hour flight from Paris to Los Angeles yesterday and got in late. So I think it's really important for traders to kind of understand their mindset. I know I did not sleep well last night. I probably got like 3 hours, and I'm the type of person who really needs like a solid 7 to 8 hours to just have my brain fully firing. So just knowing that means automatically I should be sizing down a little bit. So I've actually traded a decent amount of trades today, but I just haven't traded anything like huge, which is great. And my day is fine. Making a few dollars, losing a few dollars, nothing to write home about. Won't end up being overly memorable. But the market is up really big. It's incredible. It seems like the market is up more today on the ceasefire between Israel and Iran than it ever actually went down at any point on the missiles firing and the war starting. And what I would attribute that to is market dynamics. That always seems to be the culprit. Logically, it almost doesn't make any sense. Like, we basically didn't go down at all from the index perspective because of this war. We never went down. Probably the only day that we went down was Thursday, the Juneteenth, and that was entirely the market futures. By Friday, we were fully back up. So the market really never went down. Oil obviously had a huge move. Oil had a huge move higher, but the market itself was unable to go down for a while, for the entire month of June pretty much so far. And what I would attribute that to is market dynamics, specifically the very large amounts of downside positive gamma that we ran into in any negative headlines. So gamma is a really important part of market structure. It comes from options market makers who are hedging themselves by taking the other side of customer options trades. So if you see a lot of customers that are selling options in the S&P, the buyer of those options a lot of times is going to be a market maker. That's their job, but that market maker does not want to have any actual risk on that trade, so they're immediately going to be coming in on the other side and like buying, for example, the SPY or something like that to hedge it. And then options are dynamic, right? They move based on time, based on price. So the structure of the market prior to OPEX on Friday, and this OPEX that we just had, the quarterly OPEX was one of the biggest in history, was such that anytime the market would move down 1%, you'd be met with $15 billion worth of buying from those options market makers. They were coming in, they were forced to buy just to maintain the hedges on their position. But think about that. What does that mean? It means if there was bad news that came out at any point, let's say last week, that was trying to drive the market lower, as soon as we would go down 1%, it was met with a full $15 billion worth of buying. Could there be more than $15 million worth of selling to drive us down 2% or 3% or 5%? Yes, but it's increasingly difficult, right? So then we finally get OPEX on Friday, and that unleashes all that gamma. So it opens up more possibilities for the market. It now makes it possible for, if the market were to get hit by bad news, that we actually could go lower. Some people like to call it like a window of potential weakness for the market that comes in post OPEX, but it works the other way too. So we got through all of this bad news of the Israel-Iran conflict into that OPEX period over the course of the last like 2 weeks, where there was just huge supportive structure to the market. And now we finally got through OPEX, and the news is positive, right? The news is leaning towards a ceasefire, even though there's already been some violations of that ceasefire. It's been positive news about the ceasefire. So therefore, the market is actually able to move up more on the ceasefire than it ever actually went down on the war itself starting, which logically just sounds insane. But when you think about it through the perspective of market structure, market dynamics, all of a sudden it makes a lot more sense. So that's what we're dealing with right now.
You and I have talked in the past about how the market's reaction to things, whether, it be up on up news, down on bad news, etc., it tells you a lot about the environment, whether you want to be bullish or bearish. Like you mentioned, with this war, not really a down move, but big up moves on the good news. So does that put you in a more bullish standpoint, because we're definitely getting muted reactions to bad news and good reactions to good news?
Yeah, I mean, so the big news signal that I really like to pay attention to is when you get bad news that you can't go down on and good news that you can't go up on. The fact that we're moving higher on good news is normal to me. It was notable that we couldn't go down on bad news, but I think if a lot of the bad news that hit the last 2 weeks were to hit right now, we actually would be able to move down. Is the difference? So yeah, I mean that's just the structure of how markets work in the modern age, where it's like options lead the market even though they're technically derivatives of stocks themselves. I think I covered your question, right? Was there another part to that
Yeah.
question? What
No, you're
what
good.
was the
You're
other
good.
part of it? Remind me. I didn't
No.
like I said, I didn't get any sleep last night, so this is exactly what happens.
Good. You covered it. All right. You
Cool.
mentioned how the market doesn't or couldn't go down, hasn't gone down in much of June. We have 3 trading days left. Tomorrow, Thursday, Friday. Yeah. Today, tomorrow, Thursday. 3.5 trading days left of the month of June. How has this June been different than the typical seasonally slow month that June is?
I mean, it has been slow. It has been pretty slow. If you look at a daily chart of the spies, which I'm on the phone right now, so I can't do a screen share,
I'll try to pull
but
up a chart for you that we can look at.
it's been primarily a sideways to up month, and June historically is a small green month, so it's been a very quiet month. It's been higher. July, on the other hand, though, is where a lot of seasonal strength comes in. And I think this actually circles back to the question I forgot to answer that you just asked me. The market technicals look extremely bullish right now, like extremely, extremely bullish. We basically went sideways for the entire month of June. And today, the S&P and the NASDAQ are breaking out of their entire June range. And that is as we go into July, which tends to just be an incredibly strong month, especially those first 2 weeks. You get a lot of new inflows that come into the market because it kicks off the second half of the calendar year. And, I don't know where it ranks in terms of overall seasonality, but I know that July tends to be one of the strongest months out there. With that said, we do have like the July 9th tariff deadline that is approaching. So maybe we get some headlines and some volatility around that. But I think that the consensus from the market is that we're just going to get a further pause, which would just keep the status quo going of this market bullish technicals bringing us higher. It looks like we're set to go after all-time highs.
All right, this is the daily chart of the SPY for June, all of June. What is the chart? So analyze this chart.
So I would scroll out a little bit more if you can, just
All
to
right.
get perspective. Like maybe look at it through April, May, and June, so you can get some perspective of how heavy we were moving in the months of
Yeah.
April, May, where we came from. Yeah. So now when you look at the chart like that, you can just see how big and fast and hard we were moving for April, May, and then how relatively tight June was. Like we had a little bit of an upside grind over the course of the month of June, but for the most part, we went sideways and nothing happened until literally today. Today
Yeah,
is
so
the
today's got a
technical
big gap.
breakout. Yeah, and we had a big gap up higher, gap and go basically. We're grinding up on the ADMA on the 5-minute chart all day. The SPY's up 1.1% as we're having this conversation. The Qs are up 1.5%. It's monstrously bullish.
All right. All right. Is he still speaking, the Fed chair? We just heard from him. Is he still talking?
I know he was chatting all morning.
Yeah,
I'm not sure if he's still on.
testifying in the House.
Yeah.
Testifying in the House today, and then I think he testifies in this. So that would assume he would testify in the Senate tomorrow. Nope, just in the House. Interesting. All right, so he's testifying in the House today. So we're hearing a lot from him. The main point being that they're still focused on inflation and not letting inflation come back. Basically, what do you think his message and the market's reaction to his testimony today says about how traders are feeling about the Fed policy for 2025?
So the market's reaction has been not at all to what he has said today, because he's just repeating the exact same message. I find that what Powell says in these congressional hearings tends to not move the market compared to like what he says when he does a Fed meeting. On the other hand, I think it was one of the Fed members. I was on the flight all day yesterday, but I think it was Bowman who spoke yesterday, who said basically maybe July cuts can be on the table, and that actually helped propel us higher yesterday. Also, maybe we're getting a little bit of technical follow through on that today as well. So I mean, they're going to cut eventually. It's just it's the exact message that Powell's been saying. I personally get where he's coming from. I don't necessarily fully agree with it, but I totally get where he's coming from. They view inflation as a bigger risk than an economic slowdown. They think that an economic slowdown is something that they can combat more easily than a inflationary spiral that gets completely out of control. It's more difficult for them to actually tackle that. They would have to do it by raising rates, and if inflation gets out of control, sometimes the only way that you can really stop it is by actually causing a real recession, and they want to avoid doing that. The message has been consistent. They're seeing the economy slow down a little bit, but it's still in good standing. Unemployment is still low. Inflation is a little bit above 2%. So they're just in wait and see mode to see what the impact of tariffs actually look like. And we still have not seen tariffs impact the economic data yet. It's still just been a little bit too early. I would hearken back to Walmart's earnings, just because it's one of the most important retail companies that's out there. When Walmart last reported its earnings, it said, we could probably hold off on increasing prices until the end of May. So it just means that, we're in June right now. So basically companies are only really beginning to potentially increase prices because of tariffs now. We haven't seen any of that in the data yet. I've been concerned that there's a higher probability of an economic slowdown from tariffs than there actually is from an inflation increase. So I had originally been arguing, hey, they should just get ahead of this and just cut, because the economy is going to slow down by so much that the impact on tariffs to inflation will probably be muted. But when I've listened to Powell speak, and now I have a better understanding of why he's more concerned about the inflation side than the economy side, it makes sense. So I get why he's doing it. We're going to get cuts at some point. It's just a matter of when and how many. And we got to see the data roll in. The market, the economic data that we see hit in August and September, I think is going to be particularly important, because it's going to be by that point that we're really starting to see the impact of tariffs. And it's still to be seen what trade deals might look like. We're 2 weeks away from the July 9th current deadline. I think it's going to get pushed back. I think that's what the market is saying. But even with all of this, there's only one trade deal done. It's with the UK, and we're still sitting on 10% tariffs, which is higher than they were and has an impact on growth and inflation.
All right. When it comes to ideas, I know you start index level and then narrow down based on your overall market feel, however you're feeling with the market. So when we look at the SPY up, 120-ish points from the April lows. You said the chart earlier is bullish, but what do you like here up this much from the April lows?
Sure. So the trend is your friend, and you should continue to follow that trend. And we're breaking out. The trend is bullish. You should continue to follow that trend until it changes. And the technicals will show when it changes. But we look like we're set for new all-time highs. So you could be buying the breakout at the index level today. You could be buying things that are in play that are correlated to it. I had a bunch of ideas today that I thought were decent. I was looking at Upstart, UPST as a potential long today. I had some sort of analyst reiteration or something like that today. I was looking at snow for the breakout. The gap in snow was so large, I think it made the execution a little bit difficult. But snow, beautiful bull flag over the course of like a full month that broke out today, looking incredible. Meta faded a little bit. It wasn't able to maintain its opening momentum. But Meta, we were looking at for a long today for continuation. Meta has been one of the best Mag 7 stocks that's been out there. So long for continuation versus like the 700 to 705 area. This one also, I think, got an analyst price target increase. We were looking at Reddit long this morning. This thing broke out above 130 a handful of trading sessions ago. It's been digesting above that, making a bullish consolidation. The ADMA on the daily caught up. We want to see if we can get another leg higher in Reddit. I'm also a fan of the company. We were looking at Lyft. Lyft got a nice upgrade this morning to see if that could give continuation. We were looking at NVIDIA for the breakout of 146. NVIDIA was actually one that we discussed could be a trade in either direction. 146 is a very clear, clean breakout, especially if the market is going. It's along through that level. But if for some reason it were to fail below 145, it could be a short because there's insider selling that's ongoing from Jensen Huang right now, which could continue throughout the rest of this calendar year. I think he already got started selling in June. So that extra supply, that extra selling could weigh on the stock, could potentially create a false breakout. But let the charts be your guide. And for the moment, this thing broke out as well. So that's what you want to be looking at. You want to be looking at the leading stocks, the strongest stocks in the strong market to give you continuation, and avoiding the weaker ones. You can note what's weaker. Apple has been continuously weak. It's been very trash. It's not a name that I want to be buying right now. But if the market were to fail, it could be a go-to for a short. It just seems like the stock has gotten a little bit expensive. Tesla is an interesting one. It actually broke out yesterday. I had been short Tesla. I had been using the 333 resistance level as basically a stop loss on that. I got stopped out yesterday while I was on my flight. And then I beautiful breakout. It was also about to buy yesterday. Tesla through 333, and then it was very, very weak this morning. So I kind of reshorted it through 350 this morning. It turned into being one of my best trades of the day. Was re-entering Tesla short just off the relative weakness. But this chart still, even though it's having an interestingly weak day today, it's just an inside day. It's just a percentage retracement of yesterday's move. This stock still looks really healthy also, technically, as long as it continues to hold above 333. I'll see where it closes today. If it closes weak and I have a strong profit cushion, I'll probably swing some short. But otherwise, I hope people are just long from yesterday because I couldn't take that trade because I was flying through the air, which is pretty cool that we can do that. So yeah, a bunch of stuff on the radar. Market looks fantastic. It's just about continuation, buying the strong names. It's been semiconductors, it's been AI that's been leading us higher, and those are the places that you want to be until the market finally shows us that it's done. When's that going to happen? I have no idea. It'll happen someday. Today, tomorrow, next month, next year, it'll happen someday. But for now, let's just continue to follow the trend. Still trading a lot of like a Circle, CRCL, which has gone completely insane.
Yeah.
And CoreWeave, been trading those names. Put shorts on both of them today. Haven't gotten any follow through in CoreWeave. I'm trading around break even in it, but Circle short's actually my best name of the day. 245 area has been holding a support all day. If it can lose that 245, I think this thing could give a decent leg down. 225 had been my original target, but I think that's too shallow of a target. This thing could easily see 200, if not the 160s on a real break low, or if downside momentum comes in. But no one sells any stocks anymore. They only get bought.
It seems like that. All right. So, like I mentioned, 3.5 trading days left of June. And then next time you and I talk next Monday, it'll be officially the first day and trading day of July. July 1st is Monday. When, like you mentioned, it seems like nothing can ever go down, but June was definitely more range bound because really slowly grinding higher, but more range bound than we had seen in April and May. How do you feel about July as we head into the new month?
So my general thought process is up then down, bigger picture. I think that we're still going up. I think July is just too strong of a month to mess with. I think that I could be wrong on the tariff stuff. Maybe the trade war heats up again and that dampers market sentiment a little bit, but I don't think that's going to be what happens. I think that July 9th is going to be a non-event, in which case the strong seasonality should take over. I think we break to new all-time highs. Is what this market looks like. And then maybe August and September, which happen to be like the two weakest months of the year, we could potentially see some weakness in the later part of the summer, some volatility increase, and that'll be the really interesting period of time from an economic perspective to see if we see any negative impacts from tariffs.
I'm gonna unmute myself. Sorry. All right. Let me bring my screen back up here. Oh my goodness. There we go. All right. So Derrick, I am going to let you go. Derrick is a real trader, like I mentioned, the head trader of T3 Trading Group. So we do need to let him get back to trading, especially he was traveling and has missed some trades yesterday, like he mentioned. So I'm sure he's itching to trade today. So you go to t3live.com/DO live to get Derrick's free ebook. Again, he is the head trader at T3 Trading Group, and this is a prop trading firm. And this ebook is about the benefits of prop trading, how you can work with Derrick himself and the team there. And that's t3live.com/DO live. Derrick, have a great rest of your trading day and week and month. You and I will talk in July when it is a new month, and we'll see what's ahead for the market.
Thanks, Greta. Have a good one. Talk to you soon.
All right, bye.